Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Hi, everyone. Today's Monday, July 14th. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. We did have a gap down in the overnight. I am looking at the 4-hour formations. I want you to realize that we are still in a very nasty sideways patch. It's important to zoom out when things look like this. But we had a gap down that came on the tariff news between the EU and the US and Mexico. I think it was something like he dropped the 30% tariff event. Yeah, so I think we're still going to have a few rocky days. I think a lot of folks suspect he's just going to bend again. And, that may or may not be true, but we are going to have to watch for some measure of potential shock. So, what's the storyboard? Well, if you were with me on market kickoff last night, what we saw is a fade, a gap down, and price really try to hold this 62.62 area. It lost it for a little bit, but if we're staring down 4-hour formations, remember, it's all about inventory accumulation versus inventory distribution. And we can see on our 4-hour formation that we have inventory accumulation, distribution, and then back down into the same accumulation space. Notice if I cloned this and we moved it up, you can see it was a 1x, right? That happens a lot, folks. And that happens a lot. So what are we staring down again? Same space of accumulation. We'll notice that really the breakaway event is probably going to be at the gap fill. I would not be surprised to see us try to fill the gap today, but it has been very messy. So buying pressure, the buy zone for me is 62.62, right? 6,262. Let's go to the hourly chart, see what we're staring down here. Things a lot messier in terms of motion. We've got an expected move today of $25 in either direction off of the 62.74 open. And so that gives us, 62.50 to 6,300. That's our range. So let's see what the opening candlestick looks like. Put a box around there. Pretty solid candlestick to be fair, right? Not trivial. And we just broke the edge of it. So what is that? Low 62.63. That's where I think the buy zone is, right? With what would we have to have? 62. We'd want it just underneath there. 62.58. Maybe 62.57 as a stop, so about a 5-point stop right there. But the low, 62.63, the high, 62.80.50. Where's the V-WAP? It's sideways. The overall motion is sideways. Look to the left. If we're staring down inventory accumulation, you can see that 62.50 to 62.60 area all the way up to 62.88. The V-WAP is currently 62.93 for the image that we're watching right here. Point of control, 62.72. That's about where I took the long in market kickoff yesterday. All right, that took way too long. Let's go to the NQ. Let's take a look at the 4-hour chart. Yes, it's still in broad inventory accumulation. Just a very nasty patch. I would say deep dips are going to give us the buy zone. Let's just be patient. You don't have to trade every single moment of the day, right? What you want to do is say, all right, if I am trading the big picture, what's the big picture telling me? The big picture is telling me that deep dips are still buys, that I am in some sort of mean reversion, and that mean reversion is going to find its support, and we're either going to bounce or fade. That's all we know, right? We know probable motion And all we have to do is manage risk. Support action today, you could consider 22,800 as a potential buy zone. Average daily range event puts us down at 22,636, right? Inventory accumulation on the 4-hour shows these massive wicks. Those are scary. I would say if we get down into that space, keep an eye on 22,613, right? Do I think we're going to get there? I don't think we're getting there today. But we certainly have got some kind of flag pattern going, right? We have high, low, lower high, lower low, lower high, lower low, lower high, lower low, with a bunch of noise in between. So those bigger ranges tell us to be really careful trying to buy these formations. Don't give yourself too much leeway, or you're going to strain yourself on that cord. So what are we staring down? Wow, is that messy or what? Let's just take, when charts look messy with the indicators, just take them off and stare down what you're looking at. And really, folks, what we're staring down is a big, fat piece of noise. We just tried to get up and over the opening range. What is that opening range? Low 22, right? 22,803, high 22,890.50. We just peeked over the top, back inside. Listen, 22,800 looks like a really nice place to go. I think I might try buy there, right? Look at how deep this wick is. The low here is 22,779. That means you need at least 20 points of risk, right? You need at least 20 points of risk. So be careful there, right? Gap fill, 22,935. That might be an upper edge on the formation. Of course, we know our opening range low and high can always be targets. But, that seems like the best thing to do right now because price action is so stinking sideways, friends. It looks awful. All right, let's take a look at the YM. Side note, for the NQ, before we leave the NQ, 115 points in either direction off of the opening, which is 22,860. So 115, 116 points. That's not a lot of volatility. Expecting a little bit of sideways motion. And I got to tell you, the traders are very keen on expecting bullish pressure no matter what. I mean, this really feels overactive. So, what is the opening range? Low 44,331, high 44,457. Gap would be complete at 44,550. What's the close there? Yeah, 557. And so that's what we look at. These guys look like they're trying to fill the gap, right? Inventory accumulation just broke out, and now we're holding the retest. Where are they going to go to? First line in the sand, 44,500, right? Could it pull back again? Yes. But I suspect they try and fill the gap. I do. And if we stare down all our indicators, holy cow, right? There's a lot of noise in there. If we just, let's make sure everything is quiet except volume. A volume point of control. Let's do that. Yep. And now, yeah, we want the super trend quiet. Okay. Sorry about that. I just want things to be a little bit less noisy. I mean, good grief. Price action looks noisy like that when things are sideways, right? Your technicals will just be all over the place. Just take a look at the volume. We can see the point of control is up here at 44,600 or so. I would look for that to be the target to the upside, and then just a bunch of noise. Absolutely a bunch of noise. Pretty big mess, if you ask me. All right, Bitcoin. That's me showing the, do you like my sound effects or is that a bit much? I'm thinking it's a bit much. Bit much, Henry. All right, let's take a look at what's going on here. Kaboom. All right, there is a call wall here at 120,000. And they are blasting past it. Look at what volume is telling us. We've got 3 areas of inventory accumulation. You can tell that by this, right? You go to the left, here's a box, inventory accumulation, breaks out, that's the buy zone. So you might go, Anne-Marie, never came in for the retest. How would I know? Well, you don't know. You can take an educated estimation and you can say to yourself, all right, I'm going to buy the breakout with a stop buy, and that's going to give me what I need into the next target. If it keeps holding higher, I'm staying in, right? Here's a gap. That'll be the first place that we'll look for formations. I've got a buy order down there between 114 and 115. I have no idea if it's going to come back for me. It is sitting there, though. So have a look. Bull flag, bearish formation, but take a look at how to measure nasty inventory accumulation, right? First of all, where is the old resistance? Well, it's over here. That's what you got to measure. The old resistance tells you, okay, are the traders going to be strong enough to hold above that area and give us more price action, or are they going to break down? So look again. Where's the next one? And again, these are hourly charts, right? So it's not like we're chasing things down on the 5-minute, but you can see here this big wick. They're trying to hold that big wick, but what it really does, that's the area, right? So there's the breakaway. Here's the next one. Right? It breaks out and above, pulls back, can't hold. So if you took the breakout at the top here, what you would say is, okay, it's got to hold at least the halfway spot or I'm getting out of this trade because it broke above and now it's breaking below. So the question is, if you take a short, what's the trade? Well, potentially it's all the way back down into the 120, right? The question is, what's your risk? Well, I'd say halfway up that chain at 122. If you took the short here and now, that's what you'd be staring down. Okay, so staring things down, really simple. We'll be going over this a lot in the VIP program, and so I'm going to try and share a lot of it here with us so that everybody gets to earn from it potentially, and the VIP folks just get a little bit more. But I do want to share that with everyone. Okay, so what would you do? You'd wait for 122 maybe, or you take a trade short here. I'd wait for this. That's pretty bullish, and obviously things are on the rise, but I would say, hey, short here, 122, 400, and then see if you can walk it down into prior support, right? Notice we've got some hourly stuff here, so you could go piecemeal. Hey, I'm going to take it again. I'm going to take it again, right? The stochastic is telling us we've got rotation. All right, enough of that. Let's go to oil. Okay, oil breaking out. Now, this is super interesting. I actually took a short in oil, and it was a really nice trade. I took a short in oil, and I said, hey, I think it's going to come down into prior inventory accumulation. So where is that? So I took the short at the open. I said, hey, it's going to come down into prior accumulation. And so that gives me a region that looks like this. Right? So my thought is, I'm going to go to the top of the range, 68.50. Very nice trade. All she wrote. Why did I take it? Topping, 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 topping. Tariff news. People are going to try and fade it. Look at what it holds, the point of control. So again, your thought is, let's say accumulation has lifted and potentially widened, right? Your thought is, okay, I'm holding the floor, accumulate, accumulate, accumulate. 2 things you can do. You can draw a line up here at $68.95. That's the high of the opening range, incidentally. The low being 68.46. 68, yeah, 68.46, and wait for the retest of that line. Value area high, it takes 3 hours, triggers your long, you get in, your stop right at that value area high or so, 68.71, and now you're off to the races. More inventory accumulation, breakout, retest of the breakout. This is still a long. This is still a long, right? Price action for oil. Let's see what the expected move is. For today, well, there's a pretty good bit of volatility packed in there. It's $1.23 off of the 68.68 open, which gives us, you know, almost $70 as the target. Looks like 69.80, 69.90, right? Top of the range. Looks pretty good. If this is an inverted head and shoulders, or, you know, some kind of ugly cup and handle, it's going to run 66, 68, $2 out of the range. Yeah, it looks like about 70.50, right? All right, let's go to gold. See if they've moved over. Nope. Let me double check. Wow. Sorry I'm taking so long this morning, peeps. Well, we're still in queues, so... All right, what have we got right here? Right? Price action, bullish, obviously, right? Bullish, but also tentative, right? Opening range formation is high 3387.60, low 3376.50. We have not broken the top of it. We have broken the bottom of it, okay? The accumulation, see, when inventory is like this, it's a pretty messy picture, right? We know that they're buying all over the place, right? Could be that that's the range that we're buying, with the high of 3,383 and the low of 3,367. That's what I would go for. Support edges. Uh-oh, here comes a sneeze. 3,367 on the long. They've already filled the gap, folks. So this could be the new area of inventory accumulation with the low of 3,376. Well, how do you know? You don't. So what you do is you say, hey, if it gets up over the top and it's been building pressure, see a lot of bullish candles underneath, holding the floor, you can do a buy stop up above 3,389. Expected move is, I would not be surprised if we hit 3,400 this week. 3,430 is actually my thought about the week. But today, I wouldn't be surprised if we tried to hit 3,400. I wouldn't be surprised at all. But you don't want to buy it in here. You have no idea unless you are taking a test trade that says, all right, let's see if it holds old resistance as new support. You take a buy with a micro here so you don't run into a bit of trouble, but your risk is still $10 wide. I don't like that. That's crummy. All right, that's it for me. That's all the time I've got. Hey, listen, if you're a trader that really is way into the SPY and the Q setup, let me know in the comments. I'll put them back. I just feel like most of us look at the futures and, you know, I don't want to put anything that nobody's using. All right, take care, everybody. I'll see you on the streams.